Are you a beginner in trading and wants to know what is gap up and gap down? Watch the video till the end. Hi friends, this is Chitra. Welcome to my YouTube channel. Hope you're all doing good. Some of you will be watching my video first time, so don't forget to like, share and subscribe. So today in this video, we are going to discuss what is gap up and gap down trading. So we can see when the market opened at 9:15, we can see that the price gapped up and sometimes the price gap down. So why is this happening and how to trade when we get a gap up and gap down in the market or in the particular stock or in the index? So we can see that in detail. So what is gaps in the stock? Gaps in the stock market trading appear when there is a sharp rise or fall in the price of the stock. Means when there is no occurrence of trading activity. Okay, so the price will go up from that particular price level. If say for example, if the price closed at 80 rupees, we can see the next day price is opening at 100 rupees. So between 80 to 100, there is no trading. So price opened at 100. The reasons for gap creation can be positive news released by the particular company. Change in the trade analyst view, buying or selling pressure among the traders. Sometimes there will be buying or selling pressures. And public announcements of the company's profit among others. If there is a profit in the company, they will announce that news on that particular day. So we can see that there is a gap up. And if there is a negative news, we can see there is a gap down for that particular stock. Next, we can see what is a gap up on a chart. Okay. Gap in the stock is when a chart skip over levels of price and start trading higher. That is gap up. Okay. When there is a price level, I said an example like 80, and when the price is skipping to 100 and trading above, it means that is a gap up. Same for gap down also, or lower than the last candle without a direct path through all the previous prices. Okay, and gaps on the charts are momentum signal in technical analysis in the direction of the gap. So if there is a gap up in the stock or in the index, it means that there is a strong trend, that is there is a momentum in the particular stock. Okay, on an intraday chart, if an opening gap versus the previous day close in the price is not filled, okay, in the first hour of trading, that the gap is not filled in the first hour of 1 hour of trading, it generally continues to move in the direction of the gap for the rest of the day. Okay, this is the example of gap up. You can see in this picture here the price closed yesterday, and when we see in the morning candle, this is the first like 5 or 15 minutes candle, you can see there is a difference between these two prices, that is a closing and opening of the prices, and also there is a gap in between the opening and closing of the previous day. We can see that there is no candles in between. So this is called gap up. Means if the closing price is at 95, it is explained here. If the price closed at 95 on the one candle and then opens trading higher at the next candle, that is if the price is at 95 and the price is not going to 96 or 97, it is going at 100 rupees. Okay, then that is considered as gap up in the price. Okay, so this is the example of gap up, how the gap up will be looking like. So what is gap down then? So this is a picture of gap down. We can see in between these two candles, there is no any candles formed. So price directly opened down, okay, below this price. And between these two prices, there is no candles. So if the price close at 95 on one candle, so this is a 95, the price is here at 95 and then opens trading lower at the next candle at 90. So in between 95 and 90, there is no 96 or 97, there is no candles formed in between that. So from 95, this is a 95 and next candle is opening at 90. Then that is considered as gap down in the price. So this is a picture of that. So this is considered as gap down. So why gap up and gap down? A gap in the price on a stock chart shows the absence of traders, that there is no traders over the sequence of prices where there is no buyers or sellers for that particular level where they are agreeing to trade that level or trade that stock. Okay. A gap shows an absence of interest around a price range that is simply skipped. They will be skipping that price where they will not do any buying or selling in that particular price range. Most gaps in the price actions are caused by new events or earnings or new economic data. Due to the news also, we can see that there is a gap up and gap down in the stocks. A gap is created as buyers and sellers try to price the new formation into the chart. So gap up in the price is considered as very bullish. We will say that the stock is bullish, okay, on an average. But other technical context must be considered like previous resistance level or overbought reading. So we'll say that the price is above the resistance level. So we can see that there is a gap up according to the technical analysis. A gap up outside any previous trading range is the most bullish as there is no previous supply of stocks to overcome. Then gap down in the price may be very bearish on average, but other technical context must be considered like previous support level or an oversold reading. So oversold means what? That is that there is a gap down or the price is falling, and overbought that there is a price is bullish. We'll say that. So in that case we can see that there is a gap up in the price. So if there is a gap up or gap down, we can see that particular gap, we can draw a horizontal ray there, and we can see that the gap is acting as a support. So this is a Reliance 15 minutes time frame chart, and price opened gap up. Okay, and after that we can see that the price fall down, and when the price touches this level, when there is a gap, okay, we can see that the price is taking support. We can see that there is a price is taking support like five candles price is taking support there, and after that we can see that there is a doji formed, and after that we can see that there is a rally in the stock. And when you see again, we can see that there is a hammer formed, that is a hanging man formed in that particular level, and after that we can see that there is a rejection from that level, and we can see the price fall till the support, and once that support level got broken, we can see that there is a fall, that is a downfall in the stock. So what we can understand from this is when there is a gap up or gap down, we can draw a line or horizontal line there or horizontal ray, and we can see that the price is respecting that particular level, means that level is acting as a support, or we can say that if there is a gap down, that level will act as a resistance. So if there is a breakup or breakdown happening here, we can see that is a breakdown at that particular support, we can see that there is a fall in the price, and if the price is taking support from here, we can look for a buy. Okay, so I will explain in the next video how can we trade in the gap up and gap down. So till now we have seen what is gap up and gap down. Now we can see what are the different types of gaps. So first is there are four types of gaps, the gap up and gap down. So first is breakaway gaps, exhaustion gaps, common gaps and runaway gaps. So we will see in detail what are these types of gaps, that is how these types of gaps is formed and how can we trade using these types of gaps. Okay, so we will look into that. What is breakaway gaps? These breakaway gaps occur at the trend of the price pattern. So this is the example of the breakaway gaps. So previous day candle closes this, and the next day we can see that there is a gap down. So we can see after that the trend is continuing. So we can see that there is a fall in the price, that is stock is falling down, and also here we can see this is a gap up. Okay, and after that we can see that there is a rally in the market. So the trend may continue, occur at the end of the price pattern and signal the beginning of the new trend. So the trend is going to continue. So we can say that at the resistance level we got this breakaway gaps, and we can see that there is a fall in the market. What is exhaustion gaps? So this is the picture of the exhaustion gaps. We can see that there is a rally in the stock, and after that at the resistance level we got this gap up, that is price gap up, and we can see that there is a fall. So it means that reversal of the trend occur near at the end of the price pattern and signal a final attempt to hit the new highs or lows. So this is called exhaustion gaps. What is common gaps then? Common gaps occurs frequently, that is have little significance, and when the opening is slightly different from prior the closing price. So here this is a picture of the common gaps. So here we can see that there is a slight difference between the opening price and the closing price, that is the next day candle and the previous day close candle, slight difference in the price. The lack of significant price moves on the gap or after and shows the gap is common, and we can see these types of common gaps very frequently. So the last is the runaway gaps. So what is called runaway gaps means, what is the meaning of word meaning of the runaway is that the trend is continuing in one trend or in one direction the price is going. So we can see what is the definition of the runaway gaps. Occur in the middle of the price pattern and signal a rush of buyers or sellers who share a common belief in the underlying stock. Okay, and in the same direction. These are gaps that occur mid-trend as the trend is picking up the stream. So here we can see this is the example of the runaway gaps, and this is the Bank Nifty daily time frame. So here we can see that every day the price is opening gap up, means that the trend is going to continue. So this is called the runaway gaps. Okay, and they are typically large and price tends to follow through, moving in the gap direction over the few next weeks. Means the trend is going to continue and we can see that there is a rally in the market. Okay. So now we understood what is gap up and gap down and what are the different types of gap up and gap down. So in my next video, I will share you how to trade in the gap up and gap down. That is, how can we enter into the long and the short trade. This is my free Telegram channel and I have shared the link in the description below. Here I will be sharing the views on index, that is Nifty and Bank Nifty, along with the levels daily. And also there are multiple fake channels created using my name and the image and asking individuals to pay the money. So please don't get trapped into that. So here I will be sharing the key levels also, means the Nifty is weak below this particular level and you can go long above the particular levels. So here I will be sharing my live analysis also. Those who trade on index can make use of these levels and also my live analysis. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.